Hello friends, very recently we have seen sharp surge in gold prices. To understand reasons for this rise and what lies ahead, we have a topic for discussion titled Rising Strength of Gold and Dollar's Falling Status. Under this topic, we will discuss gold and dollar's price movement by analyzing charts using technical analysis. We will also discuss fundamental factors supporting rise of gold and fall in dollar status. So let's begin our discussion. Before start of discussion, I have a question on the sharp price movement in gold and dollar. Will this crisis change the way the market behaves? Whenever there are financial crises or risk events, investors take shelter to safe haven currencies. Gold, being a zero interest rate currency, performs well in falling interest rate scenario and also in crisis situation. Gold has been inversely correlated with the US dollar, in particular the US dollar index. That is to say that when the dollar index moves higher, gold tend to move lower. The reverse has also been true. However, in this crisis, despite USD being in an interest rate hiking cycle, gold is rising and dollar index is weakening. This is something unusual. Does it convey market does not trust dollar as a safe haven currency, or interest rate cycle in US is peaked? Let's discuss these in detail. Do charts and technical analysis indicate that gold price will strengthen further or it will retrace back from the current levels? To understand price movement, let's first analyze price movement charts. The daily gold price chart indicates that prices are moving in upward channel. Upward price movement is losing momentum as indicated by RSI and MACD. Gold is showing resistance at 2000 zone. We are trying to project price movement with the help of 5 waves pattern in a channel. Waves pattern indicate that third wave in price movement has just completed. The fourth wave has begun, which will take the prices to around 1875 and 1900 band. If gold prices do not break the support zone of 1875 and 1900 levels and starts reversal from these levels, it will mark the beginning of fifth wave, which will take gold prices to 2100 levels. We will corroborate daily chart findings with dollar index price movement and fundamental factors too. If we analyze weekly chart of gold prices, it also indicates that immediate price resistance levels are at 2000. Prices moved past 2000 during the week, but it closed at 1984 levels. Hence, resistance is continued to be in place. MACD and RSI indicate slowdown in momentum. 1900 levels is a support zone. Gold prices are moving in upward wedge pattern. Upward move in the wedge pattern generally breaks out at upside. Five-wave pattern analysis also indicating gold is heading towards 2100 levels. Now, let's analyze dollar index charts and corroborate it with our findings with gold price charts. In daily price chart, it has taken support at 102 zone and the prices has reversed from those levels. It is expected to heading towards 105.75 to 106 levels resistance zone. Since gold is negatively correlated with dollar index, we expect some correction in gold prices to the level of 1875 to 1900 zone, as discussed in the previous slides. If dollar index could not break 105.75 to 106 level resistance zone and start downward reversal, we can expect up move in gold price towards 2100 levels. In a weekly chart on closing price basis, dollar index is taking trend line support at 103 levels. In daily price chart, it has taken support at 102 zone. The price has reversed from those levels and expected to move towards 105 level resistance zone on weekly closing basis. If dollar index continue to stay below these levels on weekly closing basis and starts its reversal, it will be the confirmation for start of gold up move towards 2100 levels. Bitcoin is also being used as an alternative to gold. Any downtick in the dollar index will lead to rally in Bitcoin. Bitcoin charts also indicating reversal. In this section, we will discuss fundamental factors impacting price movement. So here my question is, are fundamental factors supporting this price move in gold and dollar? Let's begin with interest rate cycle in US. Market across the world believe that Fed interest rate cycle is peaked or near to peak. This is reflected by inverted curve of US Treasury yield. This can also be corroborated with Fed's dovish commentary in the policy meeting. They pointed to recent indicators indicating modest growth in spending and production. The recent events in the banking sector may result into tighter credit conditions for households and businesses. These all forces are deflationary in nature and supporting markets' belief of peak in interest rate cycle. Further, if banking sector issues are not managed timely, it may lead to contagion risk and recessionary fears. All these factors support strength in gold. The next fundamental factor is rising US fiscal deficit. US runs fiscal deficit of 6.20% of GDP and which is rising. Growth slowdown and rise in interest cost will further increase the fiscal deficit. This will diminish attractiveness of US dollar as a safe haven currency and give strength to gold. The third fundamental factor is financing of US deficit. US dollar is a world's reserve currency. Deficit run by the US is financed by emerging economies as it is considered as a safe haven asset. Further, countries across the globe are using dollar as a trading currency and its share in invoicing is more than 70% of global trade. Hence, all countries maintain major part of their reserves in the form of investments in US dollar by investing in US treasuries. But we have seen faith in US currency is being deteriorated. Emerging countries' central banks are not increasing their investment in US dollar since 2012. They have maintained their investments in aggregate at 2012 levels. Since US is running fiscal deficit, it is being financed by banks and monetized by the Fed. Moreover, central banks across the world are exploring alternative to US dollar. This process has been accelerated after the sanction on the Russian central bank's assets by the US. Over the period, this will reduce the dominance of US dollar as a reserve currency. The fourth fundamental factor is increase in gold demand from central banks. As per reports by the World Gold Council, central banks are accumulating gold. As per the report, in the year 2022, share of gold demand from central banks has increased to 24% of total gold demand from 11% in the year 2021. All these factors are indicating falling status of US dollar as a safe haven currency. To conclude our discussion, market believes that interest rate cycle is peaked and expecting tough macroeconomic environment due to recessionary fears. Further, market even expecting interest rate cuts in the US by 75 to 100 basis point by the end of the year. This will lead to weakening of dollar index and strengthening of gold. Rising US fiscal deficit and financial system is being used as a weapon in the ongoing Russia-Ukraine war forced central banks to look for alternative to US dollar, which will over the period put pressure on the currency and also reduces its dominance. Thank you for watching the video. Hope you like the video. If you have any suggestion and feedback, you can reach us at info@sahasacademy.com, or you can visit our website www.sahasacademy.com. You can also reach us through social media platforms LinkedIn, Facebook, Twitter and Instagram. To encourage us to share more videos, please subscribe to our channel. Thank you.